Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on our currency. So yesterday we have seen upside performance across the board in all assets. So you can see in the gold market, even in the forex and the major currencies, we see that. And the major reason was the softer rate decision from the Bank of Australia. So in fact, the Bank of Australia has become the second bank after the Bank of Canada who just decrease the pace of the rate hiking, and that was treated as a positive sign in terms of the maybe Fed pivot, and suggesting that maybe Fed also will decrease the rate change. And here we come to a really tricky moment. It's just because recent performance that we see here suggest the market's expectations, that markets currently are focused on the more diverse steps from the Fed. Some hints, announcement that the pace of the rate hiking will be decreased, maybe to reducing of the limits of the potential rate change. So this shows us the sentiment, and if this sentiment will be broken by the Fed decision and by the Fed press conference, you could imagine what will happen on the market. So it means that here we will get a big collapse. That's because Fed just will not confirm the expectations. Fed currently can't pivot. It's just because interest stands at 6%, rate stands at 4%. So this difference, it makes no sense to stop right in between. You need to either totally free the economy and provide the liquidity, buying the bond markets and just, printing money, making the devaluation of the national currency, or you need to go somewhere to the critical level where you will see clear signs that the economy just can't hold any more rate hiking. It could just break apart. And that level also has not reached yet, as we discussed in our weekly report, that the Fed has pretty nice room until this moment, because we have a relatively positive employment market. They have shown that gross domestic product have increased, although it actually has decreased. And on that background, they still keep going higher. So besides the example of the Bank of Australia, it can't be put in a row of the decisions on the central banks, especially compared to the United Kingdom and United States, just because Australia has absolutely different, as Canada, by the way, absolutely different structure of the economy. They are export oriented, mostly on the commodities. And Australia could decrease the rate changes just to stop depreciation of the Australian dollar. So they moving rate a bit higher, but not because they are struggling with the big inflation. They have absolutely good budget. They have very low debt, good performance, trade balance. So everything stands good. And as I said, that Australian dollar is one of the most attractive currencies right now. But they could rise rate. It's just because to stop technical pressure from the rate differential between the United States dollar and Australian dollar, this artificial pressure on the currency, you could take the intervention as a Bank of Japan does, or you could just move rate but not as fast, just to decrease this pressure level on the national currency. And I think that Australia is moving in this direction. So what could happen on the euro currency from technical point of view? So we just discussed the sentiment, and if we are correct that Fed is not pivoting right now, it's maybe big hurt for others, for markets, and could trigger a significant drop. On a technical side, we discussed the retracement based on this engulfing pattern. This retracement mostly comes to an end, at least the minimum target of this retracement. On a daily chart, I would consider the appearing of the grubber, because here price stands very close to the MA city. Volatility in the nearest few sessions probably is promised to be high. even before the non-farm pros will get the Fed report, Fed release. So watch for a grabber. If we will get the grabber, then we could speak about possible upward continuation, or at least some attempt of this. Because in general here we have the bullish picture. We have ABCD with the not bad actually thrusting action. Trend still stands bullish. That could be treated as retracement just because it's just 30% pullback. On the 4-hour time frame chart, the minimum target of this butterfly has been completed, which is also 30%. And take a look, market stands at the confluence. First confluence has been broken, it was right there. Now it has hit the next confluence. So we could potentially get the grabber around the confluence on the 4-hour time frame chart. This is good. The last thing that we need to get is just clear bullish reversal pattern, which we don't have it yet. So if you take a look on the hourly chart here, we have some downside widening triangle here. We have uncompleted XOP target, and its completion will be nice. It's just because it agrees with the confluence. And this minor spike for XOP might be a good moment for appearing of the grabber. So 46 target of the XOP stands precisely at the MACD predictor line. So if it will happen within 1-2 sessions, it will be very good. And then just need to see what patterns might be forming here. Supposedly it might be some kind of the hand shoulders performance if market will break it up. Maybe some other patterns. Maybe butterfly will be formed. So market could just fluctuate here, complete the XOP with some butterfly action, and then turns to reversal. Let's take a look, by the way, on the extension. It's almost there, so you can see 127 stands very close to the XOP. That's the things that we need to keep an eye on. For the bears, correspondingly, you have to wait for opposite price performance. The breaking of all bullish tools. So it could be achieved relatively simple if market will just collapse through this area, showing no grabbers, turning trend to the bearish. Well, that at least gives you some chances that we could go further to the downside. Probably this will be triggered by changing on the fundamental background. If Fed will be rather hawkish in the comment statement, if no hints will be given on the possible pivot, that might put well, markets in some upset or in some depression, and this could trigger the downside continuation and rising of United States dollar. So that's the things that we intend to keep an eye on in euro currency.